Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of Kirkland Lake Discoveries, a company that has assembled a 400 square kilometer exploration portfolio in the Kirkland Lake region of Ontario's Abitibi Greenstone Belt. It's Stefan Sklepowicz. Great to have you on the show.
Thanks, Jesse. I'm really looking forward to this.
Me too. I want to start off with a discussion of the overall gold market, and then we'll dive into Kirkland Lake. Very exciting times for gold right now, breaking out to new all-time highs and climbing higher after being in a consolidation pattern for around 4 months. What does this move in gold tell you, and where do you think we go from here?
I think this move is in gold is different. What I think we're seeing here is not just another rally in gold, but we're seeing a repricing of gold. For decades, gold has been touted as a hedge, but what we're seeing now is gold being revalued as a core monetary asset by the broader market. There's a series of macro factors that are leading to this and influencing it. But first and foremost, I think it's the inflation. Everyone remembers when Jerome Powell said, we're experiencing this transitory inflation, and we were led to believe it was going to be a short-term bump and things would correct shortly after that. And, we're 5 years later and it's still going on. It's lasted way longer than any central bank could have ever predicted. So even if there is moderation in the CPI, the cost of living is still ballooning. Food, energy costs, housing, everything keeps rising. And, what that's doing is eroding the trust that people have in fiat currencies. So, we're seeing global debt at record levels. The US alone has over $35 trillion in debt. That's such an unfathomable number. If you put it in perspective, a billion seconds ago, it was January 1994. And, you had, the Mariah Carey at the top of the charts at that time. If you go back 35 trillion seconds, that's over 1 million years ago. You're back to the Stone Age. So it's just a huge number. I wish I had $1 billion, but 35 trillion, that's it's just an insane amount. And it's not just the debt. They're still running, multi-trillion-dollar deficits on a yearly basis. So it's not that these numbers are just staggering to start with. They're growing at a staggering rate. And so people's trust in fiat currencies is disappearing. And typically in the past, the only way that these things have been remedied or fixed was through hyperinflation or currency debasement. And both of those things are extremely bullish for gold in the long run. I think we're seeing more of a revaluation because there's de-dollarization happening. People are moving away from holding dollars as a form of currency. We're seeing a distinct viewpoint with that change shortly after what happened, with the sanctions on Russia. A lot of countries are going, okay, well, if the US if the US doesn't like what we're doing, I don't want them to basically step in and say, okay, well, I'm going to take all of your resources or stop you from being able to participate in global trade. So, more central banks are moving away from the dollar, and gold is that neutral anchor that's always existed. But it basically, countries are coming back to that, being like, we can't trust the US anymore to stay neutral in conflicts. And so that's where gold is coming in. And so you're going to see a much more broad long-term trend towards diversification. And, that's what I think is this is that revaluation. It's not just a short-term, rally. We're seeing central banks buying in record numbers, and it's not just China, it's not just India, but we're getting, Poland, Turkey are increasing their buying as well. And so, the changes are going to be a long-term thing. And the opportunity or the risk that I see still is that, both retail and institutional in the West are still severely underallocated. their exposures are probably less than 2%, in gold, if any. And typically what we see at the end of a bull cycle is closer to 10%. So to me, this is just the early stages. It's not, a rally, it's fiat going down. Gold isn't necessarily ballooning and going up. It's fiat is decreasing. And I think this breakout is the market finally realizing that.
Yeah, great assessment. And you've mentioned some of the signs that gold is starting to be increasingly involved once again in the monetary system. You talked about central bank gold buying. Obviously, that's been a very big theme. We also have Basel III being implemented now, which allows banks to hold gold as a tier one asset on their balance sheets. We have BRICS members looking to settle more trades amongst themselves with gold as an underlying benchmark, and so much more. What are your thoughts on these developments and gold potentially being considered money again? Is that what you see up ahead?
Yeah, that's the thing. Is gold has always been money. It's been a store of value for thousands of years. What's new is that it's the official financial system is starting to recognize it again. Basel III was the turning point. It took gold from tier 3 asset, which was considered highly risky, and moved it to tier 1, which basically treats it the same as cash or sovereign bonds. And that's a structural shift. And so again, back to our first point, this isn't a short-term thing. This is a long-term process. The 1,000+ tons of gold that were bought last year that's not a trade, those are huge volumes. This is a strategic shift. BRICS discussing the trade settlements, for sure. That's just going back to a time 50+ years ago where that's how everything was settled, right? Like if back in the 1700s, I had a trade deficit with Spain, I'd load up my galleon with bullion and ship it across to them, right? And that's how we would settle it. And so they're just trying to go back to that. These days it's highly impractical to move that much gold. Not to mention, risky. Pirates are still a thing. So maybe we'll see, a digital backed currency or central banks being backed by gold again. I think we're moving towards that. Gold's that neutral anchor, right? And so it's going to provide that safe way to settle trades. That's not, manipulative, which a lot of times we're seeing, in the current markets. That's what's going on. And I don't think the dollar is going to disappear overnight. Like I don't think that's the intention or the change that's going to happen. But what it's signaling is that there's a multipolar monetary system. At one end we have that dollar, at the other end we have BRICS with the gold, and we're seeing that split. And so you're going to see more countries diversifying across those two polars. And up to this point in time, the majority have all been on the US dollar. And so you're going to see that diversification across to gold. And again, Western investors are behind. Their portfolios they're tech heavy, they're debt heavy, and they almost have zero gold. And central banks have, been diversifying away from the dollar and accumulating more physical gold. And so I think that's where the opportunity lies for the Western markets, is that we're going to have, more people moving into the space as we're seeing, this trend catch on. We have a tendency to be at the front of those curves, being central to the market, being part of it and seeing the ins and outs every single day. But what's going to end up happening is more and more people are going to realize, these central banks are buying a massive amount of gold. Maybe I should be buying some too, or maybe I should be looking at some other torque that can come along with it. And I don't think gold needs to replace the dollar. I think it just needs to restore balance. The fiat currencies are out of control. They're printing money like crazy, and there's no tie to any type of anchor. And so gold will be that anchor again. And yeah, I think what we're seeing is that quiet but powerful, remonetization of gold. So to me, this is a really exciting time. Scary, but exciting.
Yeah, completely agree. I want to turn to the gold mining space because this is an area of the market that has really come to life recently. The GDX ETF is up over 95% year to date. It might even be higher by the time of this recording. What are the factors that brought us here? And do you think we're closer to the beginning or to the end of a bull cycle for gold mining stocks at this point?
I think with regards to the change in the shift that we've seen, it's it's showing how explosive miners can be, right? So we're seeing that increase. We're seeing close to 100%. It's been left for dead for years, this sector, right? The valuations were grossly depressed, capital was scarce, sentiment was way down, and so people were avoiding it. And it's hard for me to blame them, right? So the recent rally in my eyes is driven by margin expansion. You take $3,500 gold versus costs that haven't risen the same way, right? So that gap is just getting bigger and bigger. And because it was such a crappy market previously, producers were cutting costs. They were, getting as lean as possible, focusing on profitability. And now as gold's breaking out, that gap is growing, where they're making a heck of a lot more money without those increased costs. So we're seeing more people that are slowly trickling into the space because they're realizing this, and I think that's what's pushing this gap up. But to me, it's still extremely early. Institutional money still hasn't even touched the space. In prior bulls, equities are going to multiple outperform the actual gold price, and we're not seeing that yet. So to me, it's still very, very early.
And yeah, as you mentioned, with these incredible gains, we're not seeing any institutional, or at least very little institutional interest. We're not seeing any discussion in the mainstream financial press. As you mentioned, very few, if any, financial advisors would even discuss gold with their clients. I think some of them might look at you funny if you brought up the possibility of owning physical gold, let alone the mining stocks. They would tell you that's way too risky. You need to be in 60-40 portfolio. So what do you think it will take to bring gold mining stocks to the awareness of Main Street and to more generalist investors? And what do you think could eventually bring the institutions in? Is it a certain gold price once we get to 4,000 that'll start attracting the bigger money? What are your thoughts?
Wow, man, we were talking about this when gold was, 1,700. It was like, oh, when we hit 2,000, this is going to be it. And then we're like, oh no, 2,500, that's going to be it. And then, oh no, 3,000, this is the magic number. So I don't know what it's going to take to bring it in. The way I see it, our industry is a little bit backwards in the approach that we take. The average deck is designed for geologists and people who have a deep understanding of geology and the industry. And so we're creating these massive barriers to anyone coming into the space. And so to me, that's one of the primary shifts that needs to happen, is that we need to start focusing on retail investors, on laymen, creating these investor decks that are 10 slides long and just focus on the simplicity of it. You can still have your technical deck to the side for the more in-depth investor, but we need to be starting to focus on these people. The primary form of content that's consumed is short form video, followed closely by long form video, which is my personal favorite. But how many junior explorers are focusing on that? How many miners are focusing on that? If that's how people are consuming their content, and we're not bringing anything to them from that regard, it's like, what are we missing here, right? So one of the things that we did with Kirkland Lake was, okay, let's start a YouTube series, KLDC Treasure Hunters, and the whole idea behind it was like, come experience this treasure hunt with us. Come behind the scenes. We strap GoPros to the geologists when they go in the bush, and they're peeling back moss, or they're looking at rocks coming out of the drill core. And the whole point is like, experience what we're going through and what we're doing, so you have an understanding and you can see the value proposition of what we're putting forward and what can come of this. And so to me, that's one of the biggest shifts and changes that we need to see is let's get more of our industry talking to the retail person, to the layman, and bringing them along for the ride. There's so often, I've been an investor in the space for 20 years. And the number of times you're following a company, you're like, this is a great idea. I love what they're into. And then 6 months later, the veil drops and they're somewhere else completely. And you're like, what just happened? Right. And that's a common theme in this industry where it's, there's no transparency whatsoever. And I get we have to be extremely careful, especially after, certain companies did things that they've done, to not push and be overly, what's the word I'm looking for? Overly, pumpy or whatever it may be. But to me, it's transparency. That's more important. It's bringing people along for the ride so they have a better understanding of the space. Yes, I think $4,000 gold for the long run. I think a debt crisis or financial crisis that's going to bring more people in, but realistically, we're not going to keep those people if we don't change the way we're doing things. And so, I think we need to have more short form video, long form video, really speaking to the masses in that way. I think it's the only way we're going to keep people in the long run.
Yeah, that's a great comment, making it more accessible for your average retail investor to explore the gold mining space without being daunted by these decks full of geological information that they don't understand, and they just figure, well, this is too complicated. I very much like that approach. Yeah.
Well, it's funny, Jesse. My wife just switched financial advisors, and I had influence on her portfolio previous to that point. So she had a couple of juniors, she had a couple majors, she had some funds, and the investment advisor looked at it. She's like, "Oh, those are just a little bit too risky for us. We don't really know how to deal with those." Sold every single one of them, and I was like, "You've got to be kidding me!" I'm like, of all times, I'm like, "You really don't see any value in this right now?" So I was like, yeah, you do you. I'll stay in my lane over here and I'll keep doing what I'm doing. And, in a couple of years, let's compare the returns that each of us got.
Yes, that is interesting. It's almost like kryptonite to these financial advisors. They just don't want to touch it. They just simply don't understand it. I think that's what it comes down to.
Yeah.
I think if you were to tell them gold is money, they would look at you like you're stupid. So
100%.
They just don't get it. But let's dive into Kirkland Lake and how it fits into the overall picture. Could you start by giving us an overview of the company?
Sure. So, like you said, we have 400 square kilometers, this massive land package. It's in the Abitibi Greenstone Belt, which is one of the most, prolific areas in the world for gold mining. There's been over 300 million ounces discovered. What we did is we accumulated this land package in a bear market where people stopped caring. We were able to make trades on land that most people wouldn't have held on to for 20 plus years. And so we were able to accumulate these pieces and build this massive land package. We're focused in the Blake River group of rocks within the Abitibi. And a lot of people might not know what the Blake River group of rocks are, but they're home to some of the biggest mines on the Quebec side of the border. So, LaRonde, Cumont, Rouyn-Noranda, like those camps, they're large VMS deposits that go to the bowels of the earth, and they're high grade gold that go along with them. So it's something special about the Blake River group of rocks is that they carry a lot of gold. And so our whole thesis was, there's this line that goes between Ontario and Quebec, and there's been one discovery on the Ontario side, and there's been 20, 30, 40 discoveries on the Quebec side within the Blake River group of rocks. And so we go, okay, well, is it because those rocks change at that border that's man-made that somebody drew a line on at one point in time, or do they continue across there? And we think it's just underexplored. There's been dogma in the camp. Everyone was always looking for high grade gold in Kirkland Lake. That was just along the Larder Lake crack, basically this massive regional structure. And so, we're going a little bit contrarian, a little bit anti-dogmatic, and going, let's go north of here and explore this area because that's where we think there's going to be the next major deposit.
Well, you certainly have a compelling land package, as you've pointed out, in the heart of the Kirkland Lake Gold Camp in the Abitibi Greenstone Belt, with a property adjacent to one of Agnico Eagle's producing mines. Talk to us about the infrastructure you have in place there, the historic production in that area, and anything else pertinent to your projects that is top of mind right now.
Kirkland Lake is a 100-year-old mining camp. Like it's been around forever. And so the infrastructure there is far reaching, literally everything you could possibly need. It's a brownfields camp. Over 27 million ounces of gold have been extracted from basically within the town of Kirkland Lake. And so with that, it's, we have access to some of the best people, the best drillers, geologists, et cetera, in the world. And, you mentioned Agnico, they have the Macassa mine, which is in production. It's had, a 5-year mine life for the last 25 years, and it just keeps growing every time. They put out a new resource, they get a little bit deeper, there's more gold. They're moving the Upper Beaver into production, which is an intrusion-related copper gold project. That's on the east side of our property, less than 2 kilometers from our border. So they've already sunk the shaft there. They'll be pulling ore out in the next 2 years, probably full production by 2030. So it's a well-known, safe jurisdiction, community relations. They understand mining. You just have to treat them with respect and make sure that everybody's on the same page. And so there's no barriers to moving to production once you find a deposit.
Well, you recently released some drill results from the KL West property. I'm going to read a quote from the press release. The results confirm the role of the Winnie Pluton as a key driver of mineralization and represent a significant advance in the company's intrusive-related exploration model across a district-scale land position. Walk us through the details here and how you plan to capitalize.
Sure. So I'm gonna rewind just a little bit, Jesse, to give you the backstory of this intrusive system, because it will make more sense. So we did soil sampling, geophysics across our entire property. We did all the boring stuff, the things that majors like seeing. And what it does is it builds the hypothesis and the thesis behind what we're exploring. And so on the west side of our property, there's a large pluton, an intrusion, a granite that's come up through the bowels of the earth. And on the edges of that, our soil sampling showed clusters of pathfinder minerals for intrusion-related VMS type of deposits. And so we saw elevated gold, moly, bismuth, tellurium, copper, zinc, all those things. And they were pocketing kind of on the edges of this intrusion. And the geophysics is showing magnetic highs that are aligning exactly with those soil samples. And so when we saw that, we started looking at the surrounding area, and there was one property we hadn't brought into the fold that was on the very southern tip. And so I was able to do an option agreement with those guys. They had drilled it in the 80s and it hit some massive sulfides previously. And so they had explored it kind of to the east away from the intrusion. And what we ended up doing is, with this new hypothesis, drilling it towards the intrusion. And so we had 4 different holes that intersected semi-massive to massive sulfides. And then on either side of those massive sulfides, we had a disseminated sulfides halo. And so that halo is basically indicating that we had, fluid going through these rocks and depositing those sulfides. So less of a VMS type of system and more towards this intrusion related system. And so the value that we've shown is that this entire intrusion is now far more prospective. We already showed that there was this hypothesis because of the soils and because of the geophysics. But now that we actually have a drill hole that's showing this is intrusion related material, it opens up this entire 17 kilometer contact with this intrusion. And so we've only put 4 holes into it. It's the first drilling we've done there. And so to help unlock that, we're doing a high resolution magnetotelluric survey, which basically gives us down to about 2 kilometers depth along that contact, and to showcase exactly what that intrusion is doing. Because a lot of times we think, it's this nice cone shaped, material. But what ends up happening is a lot of times it's like toothpaste going up through a crack. It will take whatever, loose space there is and go everywhere and anywhere. And we encountered that with our drilling, where we thought we were going to go through the contact and ended up just hitting the intrusion. And so we know it's not this angle, it's more like this. And so the whole idea is, if you can find these pockets where that intrusion squished, the country rock together, you're going to get deposits forming in those areas. And so it's not necessarily just this one drill hole that we've done. It's unlocking that entire 17 kilometers. And so those are the steps that we're doing right now.
Great. And so when it comes to catalysts and news flow upcoming, What are the main things that shareholders can look forward to for the remainder of 2025 and into next year?
The assay, we haven't even gotten assays back yet for this drilling. So we have, like I said, we have 4 holes that have semi-massive sulfides with, or massive sulfides with a semi-massive halo and to disseminated halo. So those are going to be probably the biggest catalyst. There was a lot of chalcopyrite, pyrite, sphalerite, so we know it's going to be high grade zinc and copper in those drill holes. We just don't know if there's going to be gold or silver that came along with it. Typically in the Blake River group of rocks, you do see that elevated number, and so we're really keeping our fingers crossed that we're going to see something similar. And so that's the primary catalyst coming up in the next few weeks. Labs have been delayed, unfortunately, which is great. That means the industry is functioning and everybody's working, but it's frustrating because instead of it being 2 weeks, we're now into 4 weeks. And we contacted the lab this morning, and we should have them by the 22nd of September. And I was like, wow, that's way past our 21-day promise. So it's frustrating, but at the same time, it's outside of our control, and we just gotta keep going with it. The MT survey is going to really highlight exactly where those pockets of mineralization are. So it'll pick up conductivity. It's going to pick up those contacts. So when we combine that with our superficial geophysics of the magnetics, along with the geochemistry, there's going to be lots of highlights of these are where we're going to be testing. And that's what's next is moving, into that continual drill program. We have a lot of interest right now. And so we expect this is going to be an ongoing drill program, for the next year type of thing, where we're going to be unlocking this entire district. So consistently putting out drill results, keeping up with our KLDC treasure hunters. So you're going to be getting updates all the time. And it's just this ongoing program where we can potentially be unlocking this entire 17 kilometers with deposit after deposit after deposit is what we're aiming for. So that's kind of the next year, which is a very exciting time given everything we already talked about today and what's happening with the gold price. So
is there anything we haven't yet touched on, or anything you think it's important to emphasize that potential shareholders of Kirkland Lake Discoveries should be aware of?
The only thing that I think of, Jesse, is the given these markets and given the timing that we're in, the torque that juniors provide is exponentially higher than gold or GDX specifically. If you're looking at miners, the juniors in the past have far exceeded what those guys are doing. And if we're in the early innings, which most people in the industry are believing, that means we have a lot of runway for those juniors. I had somebody the other day be like, I had done an interview and one of the comments was, I wish you had brought this to me in June, July before it tripled. And I was like, well, doesn't mean we're done. There's still a lot of runway for this industry. And we're on the verge of massive discoveries. So it's not, the torque that comes with those junior miners is insane. And that's kind of what we're looking at here. And, you couple that with a safe jurisdiction on the verge of discovery. This is a really interesting play right now.
Great. Well, I'm going to put links in the description to Kirkland Lake Discoveries website, social media, and of course the YouTube channel so people can follow along with that Treasure Hunter series. That sounds really fascinating. Stefan, it's been a fantastic conversation. Thank you so much for coming on.
No, I appreciate it, Jesse.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.